Morning all, it's Tuesday the 11th of March 2014. Welcome to the Market View. And let's start off by looking at the daily chart. Yesterday we saw the market move lower. We had this resistance in the top area here. Let me just draw this back into the chart for you. Let's just draw that in. So we saw this in the previous market views where we got some resistance at 16764. We spoke about this yesterday as well. We also marked up yesterday, let me just remove all these other lines just to make life easier for you. We had support at, the wrong one, let me start again. We had some support at this level which the market broke yesterday. We can see the market trading through this level down to the 166.50 area. And during yesterday, when the market moved lower, you could have marked up another one, and believe it or not, this is where the market stopped, 166.28, which we're going to look at in a bit more detail in just a moment. So yesterday managed to pick up 50 plus points, close to 60 in fact, based upon the support that was in the daily chart and also the three-quarter retracement to the previous low from the high to the low there. So let's just have a look at this in the 30-minute. We can see we had the sell. It was quite a large risk, not one I'm really fond of, but there are ways of actually mitigating that. And how you do that is if the market fills like it did here, you can see the market trading through the psychological level here of 167, and then the market coming back, and we see some buying coming into the market with the green volume there. The market also coming off the low, closing back above the 167. Next bar is a green bar, and as I've shown in previous videos, but for those of you that are new, if you want to stay in the trade for a long time, you have to apply some sort of common sense and logic. And the logic is very simple, really. You know, if the candles are showing red, the market's moving lower. If they're showing green, there's some potential strength coming back into the market. So one way of doing this, the initial risk on this trade was 50 pips, and a way to reduce that is to actually use 50% above the first, whoops, draw it up in the right place, 50% above the first green bar, and this way it reduces the risk significantly. Let me just pop on the original, there we go, we've got the original stop there for someone in recent. It's only saying -16, which is because I've drawn it on the wrong bar. Let's try getting it on the right bar, and then we'll be away. There we go, 50 pips. So we can see we're still out of pocket on this basis, but the market doesn't come back and close above. We then get reds all the way down until we get into this area. This area is just below 166, is it? Let's just have a look. Get the price up for you, 166.50 actually. So the market's moved 50 pips down to this area. The psychological lines, the grey lines, show 50 pips, as I've mentioned before. So this is a great way of being able to just sort of eyeball the chart and see what is on the table there. So we now get another green bar coming into the market, and again, green in a down move indicates that there's some potential strength. 50% above this bar and 50%, I'll just remove that one. And then we get another green, but because this one's higher than the previous bar, it doesn't really count, because what we're looking for is a lower high to actually lock in the profit. So the next one is going to be this one, and we can see the market following doesn't come back. This is higher than the previous one, so we keep the other one, and there we see the market taking this trade out at 166.41. Now, interestingly enough, there's if you're not taken out of the trade and you wish to stay in it, notice this here as well. You've got the market testing at these lows. So let me just draw on a zero line and go to the first one. We've got 166.21. Let's go back to the daily chart, and you can see 166.28 is where the 76% is. And there you see 166.21. So no surprise the market's finding support in this area. It's purely and simply down to what we do first thing in the morning by looking at where there is likely to be some support or resistance in the larger time frame. So the market, having broken the high to low there, it then went on to sit on the I'll just remove this one. It went on to sit on the 76% retracement from the recent high to low, and in fact I've just drawn, notice that's drawn on the wrong line, it's not exactly the high. So there's the low to the high, and there you go. So it's 66, 63, 31. So the market dropped 10 pips before, after that, and then came back and bounced and sat on the 76% there. I mean, it's quite simple. All we're doing is just measuring how far the it's gone up, how far is it going to come back down against the previous low, and generally the market will find support, as you've seen in the market view, at the 76% level. So the question is, what if the market finds support here? Well, if it goes back up, what's 3/4 of the way back up? Well, just using the fib extension there, and there we can see 167.22 and 45 for the 62 and 76. Again, you don't really need to know about this. I popped these figures in. It's just something you want to, or should do, make a note of, so that should the market move higher today, reverse, and it's as we're in this sideways range, there's nothing to say that it won't, then we could see the market move higher. But what if it moves lower is also a consideration as well. Well, I'll just pop some other figures on for you as well. The next low is this low up to this high, and there I can see now I've got some sort of indication of where the market's likely to come back to. So there's a way of seeing where the supports are before the market actually hits them, and that's exactly what happened yesterday. Just 10 pips lower. I'm sure this one here is where are we? 166.25. So anywhere in this area is where the market was likely to stop, and that's exactly what it did. So a nice 50 plus pips yesterday on that trade, just by using the logic of waiting for green bars to appear in the down move. No need to panic once the market starts to move. All you've got to wait for is a green bar coming into the market in the sell side to show some strength coming into the market. At the moment we have a potential long lining itself up here as well. So again, if this one is filled, I just go back to the daily chart and have a look and see how far this could run. We've got a run up to the psychological level of 167, followed by 20 pips above that as well. So let's have a look at the news, see what's coming out today. We've got manufacturing production from the UK at 9:30. There's a EcoFin meeting at 10:15. Not really too concerned about that. And nothing for the US today. So just the inflation report hearings at 9:30 and the manufacturing production. So that's it for today. Good day yesterday. Let's hope this continues today. A reversal back to the upside would be very nice, of 100 pips range, and hopefully the signal that we have at the moment would continue in that direction. We've got the DP to take out as well, and those of you that are new to the course, have a look at the training section about what these pivot points are. There's an explanation there. They're just indications of where you can find resistance in the market, and again we can use these as profit targets too. So that's it from me. Have a great day. Let's hope the sunshine continues for the foreseeable future. I will be back with you tomorrow, and as ever, thank you for your support and also for taking the time to watch this video. Speak to you soon. Thanks for watching.